All it takes is for the S&P 500 to be down around 20% year to date, and you'd think the world was about to end. I'm now being told that we are officially in a bear market. Call me crazy, but I barely even noticed. As someone on YouTube who makes videos about investing, you'd think I'd be on top of this sort of thing. I mean, to be a good YouTuber in this space, I'm supposed to do two things. Number one, I'm supposed to create thumbnails where I make dumb faces to incite some sort of reaction out of you. And two, I'm supposed to create videos where I tell you about the current market news and spin it in a way that'll essentially play into your fears to freak you out. But unfortunately, I can't bring myself to do those sorts of things because A, there's no reason to be freaking out about anything, and B, making those ridiculous faces feels just as stupid to do as they look. For some of you, it might be your first time experiencing a real decline like this, so I can understand your concern. For the rest of you who have been here before but are still acting like it's your first time or you didn't see this coming, grow up. Here are some quick thoughts that I have in regards to the current stock market decline. I don't give a shit what anyone tells you. No, you don't have to be up to date on what's happening in the markets on a day-to-day basis if you are still in the accumulation phase of investing. What? Over the past few years, we've all become conditioned to think that we should be engulfed in the current market news every single day. It's like we're insects that are attracted to the light. We just can't help but fly into that bright, shiny bulb, even though we know that it's just going to end up zapping us. There isn't anything inherently wrong with paying attention to the latest stock market moves, but when it starts to impact your emotional state and cause you to want to mess with your investment portfolio, then that's a problem.
So you're telling me there's a chance?
Yeah! We've turned investing in economic news into a form of adult entertainment that I compared to mental masturbation. When you consume it, you basically turn into that guy that sits inside of his house, on his couch, in his underwear, by himself, with his hands down his pants.
I desperately want to make love to a schoolboy.
That's a very sad and awkward image that I just got in my head. Stop watching videos and reading news articles on everything that's happening on a day-to-day basis because it's messing with your head. Stop paying attention to it all and go do something more productive, because you clinging on to the current market fluctuations is about as useful as me washing my car, then turning around and driving it straight through the mud. The longer you invest, the more you realize that this time is not different in regards to the fact that we're in a bear market. It is different in the sense that the names, faces, and plot of the story have changed, but the overall theme is exactly the same as the last time the market has had a large decline. We went through bear markets in 1956, 1961, 1966, 1968, 1973, 1980, 1987, 1990, 2000, 2007, 2020, and now, of course, in 2022. For the record, yes, I did memorize all of those dates, and now I forget them all. There's Molly as well, taking a nap. Back to the video. Do you see a pattern? That's 12 bear markets over the past 64 years. And they're never gonna stop. This sort of thing is about as common as my dog taking a dump in the backyard every morning. And if you can't handle that many more to come, then you shouldn't be managing your own money. By the way, please help support this channel and my dog Molly, who's the one that takes a dump every morning, by hitting that thumbs up button. As much as I despise these scummy financial professionals out there, at least they'll prevent you from doing childlike things with your money, because they're greed heads who only get paid when your money is in their grubby little hands. When you invest for long enough, you start to realize that what's happening right now is pretty irrelevant in the grand scheme of things. The stock market is on the decline just so it can eventually be on the rise again. The Federal Reserve is increasing interest rates just so that they can eventually lower them again. The Federal Reserve puts more money into the system so that they can eventually turn around and pull that money back out of the system. Inflation is on the rise just so it can eventually fall again. And the same boom and bust cycle within the economy and the stock market will continue to play out over and over and over again for the rest of your life. The individual stocks that you own don't have to recover back to 2021 levels, nor should you expect them to. I know it's easy to play these psychological games with ourselves about how stocks are on sale right now, but most of these speculative ones continue to be overvalued. Yes, they're still overvalued even after dropping 60, 70, and 80%. Forget the stock price of anything over the past couple of years because those numbers were basically fake. So much money was flowing like a cheap box of wine that it went towards the highly speculative stocks for very poorly run businesses and drove up asset prices. And some of you unfortunately bought into that hype. Now that cheap, easy money is being sucked out of the system, a lot of them have no business being in business, so it's going to be fun to watch a few of them either close down or get bought out by larger, more stable companies. And if they don't go out of business, then they're going to continue diluting shareholders to gain access to more cheap money because debt is becoming way too expensive to borrow. Contrary to what many people on YouTube might tell you, issuing more shares and diluting current shareholders is not a good thing 70 to 80% of the time.
It's science.
For the record, I just made that number up, but it's pretty darn high. Most of the time, the company behind that stock that you own isn't using that extra cash in a productive enough way to make up for the loss that you, as a shareholder, is seeing today. They're better off just closing their doors instead of stringing you along for the next 15 low-growth years until you realize that it was a mistake to buy that stock. By that time, you've wasted 15 years of investing in a trash company when you could have taken the well-proven route of just putting your money into a low-cost, total stock market or S&P 500 index fund. If you enjoy buying individual stocks, just be careful because there's a lot of smoke and mirrors right now. And please, for God's sakes, stop buying stocks because your favorite YouTuber mentioned them. I can promise you, those dweebs don't know any more than you do. No names, please. If you had categorized investing as quote-unquote fun over the past few years, then you're doing it wrong, and you are part of the problem. Despite what we are subconsciously led to believe through investing apps like Robinhood, investing money should not be entertaining. If you want entertainment, then go play Catan or Hungry Hungry Hippo. It is all fun and games when the market is going up like it has been over the past 12 years. But as many are feeling right now, it's not very entertaining when the market is declining. This is not easy, nor should it be entertaining. Charlie Munger said, "Just remember one thing. None of this is meant to be easy, and anybody who thinks it's easy is stupid. If investing were easy, entertaining, and the outcome was based on how hard you tried to pick winning investments, then everyone would be rich." And I have a plot twist for you. They're not. The good news about the market going down like it has been is that you can use this as an opportunity to learn more about yourself and become a better investor. Like I said before, bear markets, crashes, and recessions are a part of the cycle and will continue to play out from now until the end of eternity. Each one you go through hardens you a little bit more and prepares you for the next one, but only if you allow yourself to learn the proper lessons each time. Keep in mind that every bear market, crash, and recession look a little different. What was a hedge against it all in the past might not work out the next time around. But one thing that will work in every one of those scenarios is you being able to keep your cool if you can intentionally learn to cope when the rough times come. Being a resilient investor, no matter the situation, will serve you well. And the way to be a resilient investor is to put your money into things that you actually understand and believe in during the good and bad times. It also helps if you just assume the worst and invest accordingly. I've mentioned in previous videos that when planning for my future returns, I expect 7%. But knowing that it could be lower, I invest way more than I need to just to be on the safe side. I also invest in something I know that I can hold on to and continue investing in no matter what. And that, of course, is boring index funds. It doesn't make for creating super exciting content here on YouTube, but I don't do things with my money just so I can make content because that's about as irresponsible as it gets. Pouring out every aspect of my life for views,
Why don't you go back to your home on Whore Island?
is something that my grandpa taught me to never do. He also taught me not to shit where I eat, which has been pretty solid advice as well. Take everything you hear with a grain of salt during a bull market. Everyone looks like a genius when things are on the rise, so it can be easy to buy into information people are feeding us. Stock picking, cryptocurrency, or some random startup that solves a useless problem can all sound extremely enticing when things are going super well in the economy. Assume that no one has your best interest in mind when they're pumping something up because they most likely don't. Now, I have seen so many shady people here on YouTube popping up everywhere over the past couple of years, and it makes me shake my head. Just because you watch me or anyone else on this platform doesn't mean we are geniuses or know what the heck we're talking about. We are all regular people like you. We just happen to be the ones who picked up cameras and started making videos. I've talked to everyday average YouTube viewers who have lost hundreds of thousands of dollars following some of the biggest channels in this space, and it really makes me sick. Once again, no names please. But because they're not public figures, you don't hear from these kinds of people, which is unfortunate. I actually tried to get a couple of them in a video, but they're too ashamed to put themselves out there publicly. And I don't blame them, because they followed some of these stock picking YouTube channels and they lost a load of money. Make sure to hit that thumbs up button please. The private financial independence community is now open to everyone. In the description I'll have a link to apply and also links where you can help support this channel as well. I'll see you in the next one, friends. Done.